New York just voted to freeze rent for 2 years on over 1 million properties. Hey, everybody, welcome back to another beautiful day in real estate. What does this mean for the real estate market in New York City? We're going to dive in today. But before we do, we're going to jump into the charts as we always do. So, first, let's talk about Brent crude oil. Brent crude oil is now entering the pocket that we've been talking about for the past few weeks. We're starting to get into that 71 to 69 bucks a barrel on the Brent crude side of things, which has been kind of exactly what we expected. We said that we might be forming close to a bottom. These trend lines have been going pretty significantly, almost perfectly, which is, which means that it just kind of means that the market's pricing in that the war in Iran may be over, meaning there's not going to be a bunch more violence. We're not going to see a lot more missiles and bombs and all that fun stuff, but we're more than likely going to continue to see this negotiation go on for months. And I say that just because right now they are in Qatar, both Iran and the United States, and neither of them can sit down in the same room with each other to figure out. They are too far apart on the negotiations right now. The United States wants denuclearization, and Iran wants their funds unfrozen and a few other things. So both of them are both over here, and to get to the middle here is going to take some time and some energy. However, the market right now is confident, and it appears to be very confident that we're not going to be seeing missiles flying around anytime soon. That could change overnight. However, right now, that's what I'm seeing. That's what I'm noticing. So at 71 bucks a barrel is where we opened up the market today, or I shouldn't say open. We still got 30 minutes till the market opens, but relatively, we're going to expect that it's probably going to be finding itself in the pocket. Like I said, this stochastic lower, and now we found a lower high. It's just been a perfect downward trend if you're trading on the charts. And WTI crude oil, we're again just getting to the pocket of 67, 65 bucks a barrel, which is where we kind of anticipated we would be. So we are seeing, and honestly, the same thing. Trend lines are just trending perfectly right now. However, I think there's a possibility that we have reached the end of the road as of right now, or getting very close to that bottom before we see at least somewhat of a pump up to 74 bucks a barrel. And then as long as things continue in a positive notion, we're going to see things move down. So my guess is it's going to kind of do something along the lines of this, and then do a little consolidation, and then it might continue to go down based off of current talks and current conversations. I don't say for sure. Obviously, trade's all about probability, but it is what it is. So excuse me. So we've kind of, this is good. This is good things, right? This just means that we're moving towards a very positive next step. And we did see the jobs reports come out today, and if we have some time at the back end of the video, we'll dive into those just a little bit. We saw that the S&P 500 is already kind of potentially finding another local top, which are not 110% about. However, it is possible that we might have seen a recent top, and we could see some downward action here over the week, towards the back end of the weekend. However, the market opens in 30 minutes. We'll kind of figure out. It did have a nice little bounce, V-shaped bottom. Like we kind of said, the double bottom is almost perfect on this, where it's got a lower bottom and then a higher bottom, a higher high, lower high. I mean, this is almost perfect to see another big move up. So we'll pay close attention to that. However, the one thing that I noticed today that actually kind of caught me off guard was this. Oh, geez, that's not what I wanted. This right here, this candlestick is showing something juicy. So we have a trend line that was broken a couple of times. However, it does track pretty far back, all the way down to here, right? Not perfectly, right? But it did kind of break below it. And we will notice now that it's finding resistance underneath that trend line. And this is the 30-year bond, by the way. The 30-year bond has been close to 5 and over 5 well, I mean, it's starting to come back close to it, right? And with this, there's some news coming out here that we'll dissect but basically there's about a 70% chance that they're going to be raising interest rates before the end of the year. And the reason that is because we're starting to see the Fed has been buying $40 billion in treasury bills per month, which is quantitative easing, right? So it's putting money in, or flooding the market with money, buying up its own assets to show that there's some growth there, right? And now they're pulling it back to 10 billion per month. This is Kevin Warsh, you guys. This is the hawkishness that we were talking about. Like his first meeting, people said he was first meeting he spoke at, everybody said he was very hawkish, but really at the end of the day, he was kind of, let's just put it this way. He was not very vocal about anything. He was very broad about the decision. He was very open to he didn't really have a direct line. Like, it gave us an idea. He has some hawkishness tendencies behind him, but I mean, for him, more than likely, we're going to see an interest rate hike before an interest rate cut this year, and that's not what everybody expected. It was kind of the opposite of what everybody expected. However, we're going to pay close attention, but when I see something like this, I first they start pushing money into the economy to start raising the economy in some way, shape, or form. And when they start pulling back, gets closer to quantitative tightening, right? 10 billion a month is really not that much money if you put your eyes and ears to it. And people think 10 billion, that's a lot of money. It's not as much money as people would anticipate. But the big story that we're going to talk about today, and I know we're 5 minutes in already, but New York just got a 2-year rent freeze, and people are loving it. And that is, and we're going to talk about it. Let's talk about it, because there's some harsh realities that New York is about to face, and it is going to be an interesting next couple of years. So, landlord in New York says that he will not be able to maintain his properties because of the Zohan rent freeze. He says it's because of property taxes. Each of his 3 units he owned break down to $1,000 per month each in property taxes, and they go up every year. With a rent freeze, property taxes continue to go up. He will have to pay off people and not be able to maintain his building. I verified this with the citywide averages, and yes, property taxes on good location parts of North New York have broken down to $800 to $1,500 per month in property taxes per unit. Insanity. So basically what you're going to see, and this is a very easy thing to kind of pay attention to. If you're in real estate, you understand, and I get it. People feel like they're really struggling because rents are going up, and feel like they're getting tighter and tighter on the bills. But this isn't the landlord's fault, and that's where a lot of you, not you, but anybody, is getting sidetracked. Right? They just think that landlords are here to steal the money and get as much money as possible, and blah blah blah. But really, the reality is like, yeah, you make money as a landlord, but you take on a significant amount of risk. Like, there's a significant amount of risk. And even in my brand new rental units, people destroy them. We have to come in and spend $10, $20, $30,000, and maybe not 30, more like $10,000 in some cases, to replace things because people don't take care of them, right? And here's the thing. If you freeze rent, if we couldn't raise rent on the average, I think it's like 8 or 10% a year, that is dangerous to the landlord, because now the landlord, and especially with these higher interest rates, landlords are not making as much cash flow as they were. Most landlords are actually kind of breaking even or barely cash flowing in some cases. And when you take away the opportunity to raise raise the rents so that you can continue to grow, but you stop that and you say, oh no, we're going to keep raising it. We're going to keep raising taxes. That in itself causes a landlord to go into foreclosure in some cases, which then the city will take over. And respect to anybody who's in politics or government, but you guys don't take care. I shouldn't say you guys, but the government doesn't take care of shit when it comes to public housing. I don't know if you guys have seen public housing by the government, but it's not taken care of very well. So those that think there are those slumlords out there are slumlords. There's a lot of good landlords out there that are going to get abolished in New York City, and it's going to cause for the housing market to take a big hit over the next few years. So let's just talk about it. I have an article brought up. So I've been now establishing everything and building it out for each video. But so on June 25th, New York City's Rent Guidelines Board voted 7-1 to set a 0% increase on both 1-year and 2-year lease renewals for the city's roughly 1 million rent-stabilized apartments. 1-year freezes have happened before, 2015, 16, 2020, and early 21, but a freeze for 2-year leases has never happened in the board's history. The politics are simple. Freeze the rent was the rally cry that carried Zohan into City Hall. So basically, he ran on freezing rents and a socialistic kind of mentality. And he appointed 6 of the 9 board members. Respectfully, I mean, let's be real here. Anybody puts that many people on the board. I don't care if you're on the right, the left, the up, the down. It doesn't fucking matter. You are putting people in there that are going to vote for your side with the same viewpoint, the same focus. That's just how it works, right? That's the same thing that's happening with the presidential candidacy. When you have that kind of power and the ability to appoint, you're not appointing people who oppose you. So yeah, of course this stuff passed, right? The scale, and he says this is a historic victory. This is the mayor himself, historic victory for the New York City tenants. This is not, because buildings are going to be destroyed. Landlords are not going to have the cash flow to maintain these properties. The values are going to go down, and they're going to sell those properties at a loss. There's already a big investor, and I want to say, who was it? It was $1 billion investor in New York that sold his share in his rental units for 6 cents on the dollar as soon as this came out. Basically exited immediately. He's like, absolutely not. Took a massive loss on it because landlords understand if they can't maintain the property, the value of the property doesn't stay there, the tenants don't stay there, it eventually becomes condemned. That's the fucking truth of it, right? The scale matters. Rent stabilized units make up about 27% of New York City's entire housing stock. And unlike the pre-2019 era, landlords can no longer use vacancy bonuses or other tools to reset rents between tenants. New York's 2019 rent law overhaul closed most of those doors. That makes this freeze bite harder than any that came in before. So even if they get new tenants, they can't raise the rent. That's dangerous. Again, who gets it, when it starts, what it actually covers. So this is a breakdown of what's going on with this freeze, right? So effective window, there's 0% applies to the new 1 year and 2 year lease renewals beginning October 1st, 2026 through September 30th, 2027. The board votes again next spring on the following cycle. So this one cycle freeze renewed or not annually. Who qualifies? The rent stabilized apartments, generally buildings with 6 or more units built before 1974. So even... So buildings that were built over 50 years ago are not going to have the capability to maintain them. The only properties that are going to need the maintenance. Perfect. That's off to a great start. Plus, buildings receive a certain tax break or government subsidiary. Excuse me. Okay. So if it receives any sort of tax rate or government subsidiaries, I can never talk. If you rent market rate in New York City, this vote does nothing for you directly. Tenants unsure of their status can check their lease on New York State housing records. The contrast with the last administration under Mayor Eric Adams, the board approved roughly 12% in the cumulative increases on 1 year leases over 4 years, including 3% on 1 year leases, and recently as recently as 2025. Going from 3% to 0% in a single year is a hard pivot. It happened because the board's if I could learn how to read today, we'd be in way better shape. And it happened because the board's composition changed, not because the underlying building economics did. The last point is the one to underline on camera. The board's own research found landlord operating costs rose 5.3% over the past year. Insurance, labor, utilities, revenue frozen, insurance, labor, utilities, revenue frozen, cost compounding. Remember the math for the second half of this briefing. So, man, I really cannot read today, so I'm gonna just keep plugging away. I mean, at the end of the day, you're getting the picture, and if not, just comment below. Make sure to like and follow. We're gonna get better at this as we continue, but today we're just gonna power through it. So, basically, it costs about 5% more a year to be a landlord than it did last year, and right now they only have the capability of raising rent up to 3%. So now it's to 0. So now you're taking 5% less as a landlord next year. Let's say on average, the average is 5.3. That's what Castro was last year. Let's say it's 5% again flat. So now you are taking a 5% less value with a higher interest rate in an older unit building. Like, these things in itself just point to a disaster. And I mean, call me crazy. I don't care. I think it's insane. But a resignation, a legal cloud, and a dividend divided city. Excuse me. They didn't pass quietly. Hours before the vote, landlord representative Christina Smythe resigned from the board, saying the outcome had effectively been decided on the campaign trail, and that process since has been theater. Her exit means that one of the most consequential rent votes in years happened with half the owner representation missing. And owner groups say that alone undermines the process. A legal challenge is a live possibility. The split screen was dramatic. Hundreds of tenants packed the vote at El Museo del Barrio, chanting and celebrating in the street afterwards, while landlord groups warned that older stabilized buildings already squeezed since 2019 law changes could now struggle to fund repairs and basic maintenance. So those of you so that means that landlords that were already struggling to maintain the building are going to struggle even harder now, okay? Both sides are describing something real, okay? For tenants, this is genuine relief after years of increases outpacing wages. Again, not the landlord's fault. This is a government situation and business owners as a whole, right? If you're not raising and outpacing wages, I don't know how, if your job doesn't give you a raise, it's the responsibility of the landlord, but okay. For owners aging pre-1974 buildings, its revenue freeze against 5% cost inflation with no vacancy reset valve. Okay. The question isn't who's right, it's what happens to the buildings. So again, the buildings just can't be maintained, right? That's the problem that we're going to be focusing on. And when you have an increase of cost every year and you can't increase the rent, again, landlords do not just have thousands of dollars in their pockets in most cases. Some of the landlords might be able to absorb this for the next 2 years and be fine and take a hit. But a lot of small time landlords are going to get abolished. People don't realize how quickly that monopolizes the rental market. And this is what really bugs me when it comes to real estate. We have all these people that scream at the top of their lungs that billionaires are the worst thing ever. But guess what? Guess who's the only one that's going to be able to maintain these properties and not go bankrupt? Billionaires. And those people that were small investors that bought a couple of units and decided to try and build some generational wealth are going to get thrown to the back burner. They're going to get foreclosed on, and they're going to get absolutely fucked. Pardon my words. But that is the reality of what is going to happen. And maybe I'm wrong. Maybe I'm 100% wrong and the market thrives and blah, blah, blah. But here's the thing. Simply because rents are going up does not mean by freezing rents, we're not going to save the economy. We're not going to save a city. We're not going to save anything. If anything, we are going to build more issues over time, because when you can't maintain a property, you can't increase the rent, and you start to lose money every year. Landlords who have been landlords for many years and have been very good landlords and have tons of properties are now going to sell their properties, whether it's to the city or to an investor, whoever buys it, and they're going to leave. And you're going to have more Section 8 type housing than you're going to have anything else in the city. And again, maybe I am just full of shit. Maybe I don't know what I'm talking about, but this is something that's not going to bode well for landlords, which is not going to bode well for the tenant. Short term, you might be excited to see your rent decrease or stay the same for 2 years. Congratulations. You're still going to spend your money poorly. You're still going to not have any extra money lying around, and you're still going to complain about things being expensive, but now you're going to do it in a unit that's not maintained. Building economics. When revenue is frozen and operating costs rise 5%, net operating income compresses. Compressed NOI means lower valuations, tighter debt services coverage, and eventually deferred maintenance. Housing economists are already warning that if freezes continue every year for this administration, a large share of the stabilized stock may not be habitable and occupied 2 decades from now. So like I just said, if you can't maintain the buildings, they will become condemned on. Less housing, more homelessness. The banking angle. Okay. Watch the regional banks holding NYC rent stabilized multifamily loans. This is the same asset class that hammered New York City community Bancorp back in 2024 after the 2019 rent law crushed collateral values. Every additional freeze cycle marks those loan books down for a little further. Excuse me. If you followed our private credit stress coverage, this is a cousin of the same story. Paper valued for a world that is no longer exists. The supply lesson. Price controls treat the symptom, scarcity. Without adding a single unit, the contrast with a market like Bismarck Mandate couldn't be sharper. Here, affordability gets addressed by building new homes, not by freezing prices on old ones. One approach grows the pie, the other fights over slices of a shrinking one. This is not a political statement. It's just a math supply. So that last part is kind of deterring and comparing North Dakota to New York City. But here's the thing. More than likely, we're going to see it's better to incentivize to grow than it is to hold back, right? So don't get me wrong. People are going to win. You're going to have consumers that are going to win for the short term. For the next year, the 2 years, perfect. Cheers. Good to you. Good on you. But after the fact, after 2 years, when there's no maintenance and costs go up and tenants have places that are less inhabitable and potentially could be condemned, which, by the way, if they get condemned and the city takes over, they can knock them down and they can build whatever the hell they want. They might build that bank. Who knows? But we never look at the broad picture of things anymore. We're so focused on the next 6 months that we neglect to realize that in 4, 5, 6 years from now, we're going to have more problems. And if we don't cauterize these solutions, we are going to end up in a bad place. So that's just my 2 cents on that. Rent freezes are not a good idea. If you have an alternative opinion, I'd love to hear it below. Make sure to comment, and thanks for watching, like, and subscribe. We'll see you next week.